morning, Wall Street saw a sharp bounce from session lows as dip buyers stepped in following a slide driven by concerns over whether the unprecedented spending on artificial intelligence will justify all that capital. Big moves in commodities saw gold plunging as oil soared. Bitcoin dipped below 84,000 US dollars. At the close of trade on Wall Street on Thursday, the Dow Jones index rose by 56 points or 0.1%, but the broader S&P 500 index fell 9 points or 0.1%, and the Nasdaq index shed 172 points or 0.7%. At session lows, the S&P 500 was down as much as 1.5%, while the Nasdaq sank 2.6%. Wall Street's main indexes slid from near record highs as another wave of hefty AI-related spending announcements by mega-cap tech companies upset investors. Collectively, Microsoft, Alphabet, Meta, and Amazon are expected to spend more than $500 billion US dollars on AI this year. S&P 500 technology shares dropped 1.9%. Microsoft shares slumped 10%, the most since 2020, with market cap down $357 billion US dollars after the software giant's cloud revenue failed to impress and stoked fears the hefty outlays behind its OpenAI alliance were not translating into monetization fast enough. In the reported quarter, Microsoft's capital spending totaled $37.5 billion, a jump of nearly 66% from last year, and with about 2/3 of the spending going towards computing chips. That was more than market estimates of $34.3 billion US dollars. Tesla slid 3.5% after the electric vehicle maker outlined plans to more than double capital spending to a record high of more than $20 billion US dollars this year, but little of it will go to its traditional business of selling electric vehicles to human drivers. Instead, the company is shifting investment to yet unproven business lines such as fully autonomous vehicles and humanoid robots. Also weighing on markets was a drop in software stocks after SAP's cautious cloud outlook and ServiceNow's post-earnings slide of 10% deepened investor concerns that traditional software firms risk losing ground to rising competition from AI players. Salesforce was down 6.1%, while Adobe lost 2.7%, and cloud security firm Datadog fell 8.8%. Meta Platforms jumped 10.4% as the social media giant paired an upbeat revenue forecast with a 73% jump in this year's capex budget to as much as $135 billion US dollars. Communication services stocks rose 2.9%, the strongest S&P 500 performing sector. The energy index jumped 1.1% on the back of surging oil prices, with Brent crude futures hitting a near 6-month high on rising concerns about a possible US military attack on Iran. In other notable earnings, Caterpillar and MasterCard added 3.4% and 4.3% respectively after posting a higher profit for the quarter. Defence contractor Lockheed Martin rose 4.2% after forecasting 2026 earnings above Wall Street expectations. Southwest Airlines shares advanced 18.7% to the top of the S&P 500 index after the airline forecast a stronger than expected annual profit. Bellwether IBM jumped 5.1% after beating estimates in its fourth quarter earnings, and we did see Apple lift 2% after the market close, with its sales surging 16% on strong iPhone demand. At the bottom of the S&P 500 index, United Rentals fell 12.9% after it posted disappointing fourth quarter results as margins on rental revenue came under pressure. US government bond yields dipped on Thursday as a slide in US equity benchmarks from near record highs and an earlier slump in the price of precious metals stoked demand for havens. Yields also slipped as investors settled into a wait-and-see stance ahead of a monthly US employment report next week that is expected to offer clearer signals on labour market momentum and the likely pace of interest rate cuts in 2026. Applications for initial unemployment benefits were largely steady for the week ended January 24, falling 1,000 to 209,000, leaving intact investor expectations that the Fed is in no hurry to resume cutting. Traders in interest rate swaps tied to future Fed meeting dates see a roughly 12% chance of a rate cut in March, with a reduction not fully priced in until July. US President Donald Trump said he intends to announce his pick to replace Federal Reserve Chair Jerome Powell next week, ending weeks of speculation over who will lead the US central bank after Powell's term expires in May. The US Treasury sold $44 billion US dollars worth of 7-year notes at a yield of 4.018% into solid demand. The US 10-year Treasury yield fell by 2 points to 4.23%, and the US 2-year Treasury yield decreased 2 points to 3.56%. Europe's benchmark share index gave up early gains to close lower on Thursday, weighed by a sell-off in technology stocks as results from Germany's SAP and Microsoft failed to impress investors. The Pan-European Stock 600 index eased 0.2%, with the technology sector slumping 3.9%. Germany's DAX index underperformed other regional indexes, closing 2.1% lower as SAP slid 16.1% after its annual cloud revenue forecast failed to meet market expectations. The German enterprise software maker's shares logged their steepest drop since 2020. In commodity markets, global oil prices climbed over 3% to a 5-month high on Thursday on rising concerns that global supplies could be disrupted if the US decides to attack Iran, one of the biggest crude producers in OPEC. The Brent crude price rose by 3.4% to $70.71 a barrel, and the US NYMEX crude price gained 3.5% to $65.42 a barrel. Gold futures for April delivery settled 0.3% higher at $5,354.80 an ounce. Spot gold was trading near $5,390 at the US close. The metal had reversed course, falling more than 5% to a session low of $5,109.62 an ounce after touching a record high of $5,594.82 earlier in the session. Copper futures jumped 4.7% to near record highs as speculators extended their buying spree, encouraged by expectations of strong demand and a weaker US dollar. Iron ore futures fell 0.1% to $105.77 a tonne on Thursday, with traders wary of the Chinese government implementing environmental protection restrictions and conducting safety inspections in the run-up to the Lunar New Year holiday. Australian shares are poised to open modestly higher on Friday, potentially supported by a surge in oil prices, but also likely held back by global risk-off sentiment and local rate hike concerns. According to the latest SPI futures, the ASX 200 index is expected to open the day 33 points or 0.4% higher this morning. In Australia on Friday, the Producer Price Index, or PPI, for the December quarter and private sector credit data for December are both scheduled. Commonwealth Bank economists estimate private sector credit rose by 0.6% in December. Increasing market and household expectations for interest rate hikes have led to a recent slowing in home price growth, and it remains to be seen whether this will place immediate downward pressure on housing credit growth. With consumer spending still strengthening, we anticipate that personal credit will recover after a 0.5% decline in November. Business credit growth is likely to maintain its elevated pace. In local company news, medical equipment company ResMed and Champion Iron both release earnings results. On the US economic front, the Labor Department will also release producer prices on Friday, with PPI for final demand expected to rise 0.2% in December. Annual PPI inflation is seen easing to 2.8% from 3%. Credit card giant Amex is expected to post a rise in fourth quarter profit. Analysts and investors will watch for commentary on a proposed cap on credit card interest rates by the Trump administration, as well as the outlook for consumer spending. Colgate-Palmolive is likely to announce a rise in fourth quarter revenue, helped by steady demand for its products including oral care and pet nutrition. The US dollar eased against the yen and euro on Thursday, but remained above recent multi-year lows, with investors still jittery about US policy, even as a mildly hawkish US Federal Reserve provided some support. The Aussie dollar has dipped from a 3-year high around 70.93 US cents to 69.71 US cents and was last trading near 70.5 US cents at the US close. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in. Have a great day and a wonderful weekend.